afternoon, everyone, and happy Monday. You have Alyssa Corm and Ken Shreve here with a look at the stock market today. And on today's show, we're going to analyze the action for the major indexes in a pretty pivotal day here, Ken. And we're also going to take a look underneath the surface to see what stood out in a pretty weak day, especially for tech stocks. And we have you on mute. Not like that's never happened to me before or anything.
No, exactly. You're exactly right, Allie. We're going to take a look at Disney, which made a notable move in the Dow Jones today. We'll also take a look at Las Vegas Sands, which topped a buy point today, and also CF Industries, which has recovered nicely after an earnings sell-off last week.
All right, well, let's kick things off with a look at the NASDAQ here. The tech-heavy index closed down about 2.5%, so this sell-off seemed pretty strong in the tech sector. We did have the S&P 500 down 0.8%. The Dow managed to close positive on the day, up about 0.1%. So tech definitely led the sell-off here, Ken, and the selling didn't let up late into the session.
Yeah, well, it's ironic. It looks like we could actually see lower volume today on the NASDAQ. So even though there was a lot of destruction in leading growth stocks today, the Innovator IBD 50 ETF, ticker FFTY, which has been an outstanding performer in the market for some time now, that was down about 3%. So leading growth stocks really got hit, but it looks like we could see lower volume on the NASDAQ. So we could avoid a distribution day on the NASDAQ. But even though the S&P 500 turned in pretty resilient performance, looks like we could end up getting distribution on the S&P.
All right, and the S&P touching its 21-day. Of course, this chart isn't quite updated. It did fall a little bit more than that by the session's close. But flipping back over here to the NASDAQ, Ken, we're clearly now back below that 21-day line, closing at or near session lows. Now, we did in the last pullback undercut that 21-day line, but only for one day. Is there anything that tells us about today's action that could indicate something similar to what we saw in the last pullback or something different?
You know, it kind of feels like it could be different. And by that, I mean, it looks like we could just end up having a test of the 50-day moving average for the NASDAQ. You mentioned the last time the NASDAQ closed below its 21-day moving average. It was really the only time that it closed below the 21-day line since the follow-through day on November 5th. It was down there for one day, like you said, and it rebounded nicely. I mean, the difference this time around is that you've got just a seemingly larger supply of charts of top-rated growth stocks that are in a little more trouble than maybe they were several weeks ago. We've got Apple now firmly below its 50-day moving average. I believe Tesla, we've been waiting to see what a test of the 50-day would look like there. So you can see a pretty decisive break for Tesla today. So yeah, leading growth stocks look like they're in a little bit of trouble here, and that could bring a visit to the 50-day in play for the NASDAQ. We'll have to see.
And you mentioned the resilience of the S&P, and as we also mentioned, the Dow closed positive today. So it seems like underneath the surface, this is something that we've been talking about for a number of weeks now, this pretty notable rotation out of tech and into other areas of the market.
Well, there was a very bullish call on the airline sector today by Deutsche Bank. They upgraded the sector to buy. A lot of airline stocks made moves 5-6% or more. American, Delta. So strength was pretty broad-based in the airline group. I remember the cruise line operators, Carnival, CCL, which just recently broke out. That was up sharply today. So there's all of the gains today are these stocks that are, doing well because, let's face it, coronavirus is starting to move in the right direction. Hospitalizations are down. More and more people are getting vaccinated. There's going to be at least a couple more vaccines approved within the next couple of months, say. So coronavirus is trending in the right direction. So a lot of these reopening stocks are taking the leadership baton at this point.
Yeah, and speaking of economic recovery plays, clearly Disney has other aspects to its business than the parks business, but that is one element here. Looking ahead, that is going to be on the mend for Disney. Some really nice forward-looking growth estimates. And the stock really shining bright today, up about 4.5%. We were talking about this one this morning on IBD Live. It was added to Swing Trader, our stock of the day today. Ken, walk us through some of the good looking aspects of this chart.
Well, I mean, last week it pulled back down to that last buy point of 183.50. So it was actually pretty close to that buy area early in the session, but Disney just kept continued to strengthen and strengthen and strengthen. Now, I think if you bought Disney late in the session, you wouldn't be wrong for trying on just a little small starter position, because it was good volume today and a good strong close near its session high. So solid support at the 21-day exponential moving average. So, like I said, if you bought today thinking it might have been a little bit extended, I just think that the strong percentage gain and the volume that came with it, I think buying late in the session when it was near highs was still not too bad a buy. I think it's a good place to start a little small position and see how it works out.
That's right, because it's still just 7% above the 10-week line. And one, gauge that we like to use in terms of stocks that are extended is if you're using that 10-week line to size the position, seeing it within 10% of that level is a good sign. Disney, 7% above the 10-week, so we'll take it. And
Yeah,
else,
absolutely.
yeah,
Yeah,
go
and
ahead.
I was just going to say that obviously the Disney Plus streaming service has been in focus, and as people have stayed at home and been isolated due to coronavirus, Disney Plus has seen tremendous growth. But when you're talking about the theme parks and its movie business, for example, I think the market is anticipating that things could be looking better in those two areas of their business too. So really nice move for Disney today.
Great points there, Ken. And elsewhere, among economic recovery plays, Las Vegas Sands gaining about 2.5% above average turnover. Now, since the last quarterly report, Ken, Las Vegas Sands has made a very strong move, more than 20% in just a matter of weeks.
Yeah, so some sellers came into the stock late in the day. This was a breakout that was looking pretty good. It was holding near highs. I put the buy point here of 60.98. So a weak, not such a great close for Las Vegas Sands, but it's still in buy range. Yeah, and you can see the selling that came into the stock very very late in the session. But again, this is just another reopening play. Las Vegas Sands does a lot of their business at this point in China, specifically Macau, so they're not relying on Vegas as much as they were for revenue. But this is just another reopening stock, and a lot of these casino operators have been performing very very well of late. And this was a breakout today, not such a great close, but still in buy range from that buy point.
Yes, and talk about recovery in
Yeah.
bottom line growth here, Ken. Looking ahead, that's a pretty strong number to be pointing to.
Yeah, I mean they're gonna make 75 cents this year, and then a huge jump to 291 a share in 2022. So this looks good. It's got a relative strength line that's starting to poke into new high ground. Obviously, the relative strength rating has been a lot of these turnaround stocks and reopening stocks have shown sluggish price performance over the past year when tech stocks have been racing higher. So could be a little handover of the leadership baton here, and Las Vegas Sands, it still looks like it could be in the early stages of a move here.
Yeah, and this weekly chart does leave a little bit to be desired, but when you're talking about these turnaround plays, you have to give it a little bit of credit from that standpoint. I mean, we have this base here now forming for the most part above an upward sloping 200-day line. So things are starting to turn around, some explosive gains over the last month for Las Vegas Sands. So one to keep an eye on.
Yeah, absolutely. And this chart looks a lot like the cruise line operators and the airline stocks that have been breaking out in spades. So technically, you got to give these a little bit of room. They're not going to be These bases aren't going to be forming near highs. They're not going to have relative strength ratings of 80 or 90 or very high ratings like that. But these stocks are under accumulation, and
Mhm.
for that reason, they should be watched.
And a lot of tech names aren't working right now. So you can't stick with tech if those stocks aren't working and there's a clear rotation here. And can another area that we are seeing rotation into are agricultural plays, and CF Industries among them, up a number of weeks in a row now at this point, starting off the week with a gain of 2.5%. And we have quarterly earnings out of the way. And so this one is trying to poke above that 47 level. What do you think?
Yeah, it was above it for a little while today. It did manage to close near its high. So yeah, Mosaic and CF Industries reported earnings last week, and they both fell sharply on earnings. Part of the negative sentiment was because CF Industries said that a lot of harsh winter weather in the plains, specifically at some of their facilities in Oklahoma, was going to crimp fertilizer production. So that brought sellers into the stock on Thursday, but it recovered nicely on Friday and recovered again today. So I look at that 47 pivot as actionable. It gives a buy point of 47.10. It closed just below it, but yeah, if you want to take advantage of this rotation from tech into various other areas of the market, the fertilizer stocks are certainly seeing inflows, and CF Industries looks actionable here.
All right. Well, Ken, thank you so much for your insights today. Some really great perspective on a day in the market that could be presenting a fork in the road here. We're now below the 21-day line for the NASDAQ. Could we be headed towards the 50-day, or like the last pullback, could we be flipping the switch tomorrow and getting back above that 21-day line? This market rally, Ken, it seems like it's become increasingly tricky.
Yeah, well, we still have more than 20 stocks in the leaderboard model portfolio, and late in the session we did add a hedge to that portfolio because we've got a lot of stocks that are just not showing sell signals yet. We've held them for a fairly long time. We've got big profit cushions. Obviously we're watching Tesla closely here, and but we've got still a big gain there. We're watching Apple closely as well, but so we added a hedge today just because we're just not liking the look of this market, and that will cushion, losses in some of our growth names. We don't want to sell them yet because we've got big gains, but the hedge will just give us a little cushion in the portfolio.
All right, great to know, Ken. And now is the time to stay engaged more than ever with your stocks and your portfolio. So thank you so much for tuning in today. We hope you join us tomorrow morning on IBD Live, where the conversation is going to continue. Investors.com/IBD Live for all the details on that. Thanks once again for tuning in. We'll see you back here tomorrow.